Welcome, Stock Talk listeners. Let's get straight to it today.
Oh, good.
We're diving deep into Microsoft's Q3 2025 financials. The report just dropped April 30th, 2025.
Right. And there's quite a bit to unpack here.
Exactly. Our mission really is just to pull out the key insights, the big numbers, the strategy shifts, basically understand where Microsoft stands now and where they might be heading.
Agreed. It's a good snapshot. So where should we start? The headline numbers.
Yeah, let's do that. Okay, so revenue hit $70.1 billion. That's up 13% year over year.
Which is solid growth on its own. But the constant currency figure is even more telling, I think.
Right. 15% growth in constant currency. That really strips out the exchange rate noise, doesn't it? Shows the core demand.
Precisely. It gives you a cleaner look at the, let's say, organic growth, and that strength carries through to profits, too.
It does. Operating income jumped even more, up 16%, reaching $32.0 billion.
Yeah, outpacing revenue growth. That suggests they're getting more efficient as they scale,
Better leverage, maybe? And that shows up in the operating margin, right? Expanded to, what was it, 45.7%?
45.7%.
Yeah.
Yeah, that's a noticeable improvement.
So what's behind that margin expansion usually? Is it just pricing power or like better cost control?
Well, it's probably a bit of both. You've got strong demand in high margin areas, think cloud.
Right, Azure.
Yeah, exactly. That gives them some pricing leverage. Plus, as that cloud infrastructure matures, you get economies of scale kicking in. And of course, good old cost management across the board helps too.
Okay. And the bottom line reflects all that too, I assume.
It does. Net income surged 18%, hit $25.8 billion. And diluted EPS, earnings per share, also up 18% to $3.46. So pretty consistent growth down the line.
Okay, strong numbers overall. Now let's zero in on the engine behind a lot of this, I think. Microsoft Cloud.
Definitely the core story.
Revenue there was up 20% year over year, hitting $42.4 billion. That's just massive.
It really is. And what's maybe even more striking is that the cloud segment is now, roughly 60% of Microsoft's total revenue?
60%. Wow. Okay, so that cloud-first model isn't just talk.
Not at all.
Yeah.
It's the reality. And within that, Azure is just on fire.
Yeah, Azure and other cloud services, revenue up 33%? Or was it 35 in constant currency?
85% constant currency, yeah. Just remarkable growth still at that scale.
What's driving that specifically? Is it just general enterprise migration, or are there particular workloads, maybe AI?
It's likely several things firing at once. You still have that steady drumbeat of companies moving to the cloud. But yeah, AI is a big one now.
Okay.
The demand for data analytics, machine learning, AI applications, that all needs powerful cloud infrastructure, which is Azure's sweet spot. Plus, they keep adding more services, attracting more customers.
Makes sense. And it wasn't just Azure, right? The other cloud parts grew too.
Correct. Microsoft 365 Commercial Cloud, that grew 12%.
Okay, solid.
And Dynamics 365, their business application suite, that was up 16%. So broad strength, really.
Yeah, across productivity, business apps. It's not just infrastructure.
Exactly. And another key point, the Microsoft Cloud gross margin improved too.
Yeah.
So it's not just growing fast, it's getting more profitable as it grows.
That's crucial. Okay, you mentioned AI driving Azure growth. Let's pivot to AI more directly. Satya Nadella had that quote.
Ah, yes, the one about cloud and AI being essential inputs.
That's the one. Essential inputs for every business to expand output, reduce costs, and accelerate growth. It feels like AI isn't just a future thing anymore. It's directly hitting the numbers now.
Absolutely. That's the key takeaway here. It's tangible. The report flat out says that 33% Azure growth was partly driven by AI demand.
Right, so it's not just hype.
No. And look at Dynamics 365, that's 16% growth. Also getting a boost from integrated AI features.
So they're embedding AI into their existing apps, not just selling the raw infrastructure for it.
Precisely. They're providing the building blocks, sure, but they're also using AI to make their own software better, more valuable.
And it goes beyond those core areas too, right? What about search?
Good point. Search and news advertising revenue, if you strip out the traffic acquisition costs, that grew 21%.
21% in search.
Yeah. And they attribute that growth to AI integration, making search better, more relevant. So it's even revitalizing older parts of the business.
Interesting. And Microsoft 365 commercial growth at 12%, that's also getting help from things like Copilot, the premium AI stuff.
Exactly. Copilot is a prime example of those premium AI-powered offerings driving growth. It's a multi-layered strategy.
So infrastructure with Azure, platform with things like Azure OpenAI service, and then the apps themselves like Copilot, they're hitting all levels.
That's right. It's a pretty comprehensive approach across the whole AI stack.
Okay. Maybe we should quickly touch on the specific segment performance then. Break it down a bit.
Sure. Productivity and business processes, that's the Office,
Oh.
Microsoft 365 Dynamics segment.
Right. That saw 10% revenue growth, $29.9 billion.
Correct. And operating income there was actually stronger, up 15% to $17.4 billion.
Yeah.
Shows good profitability in those core productivity tools. Still very robust demand there. Okay, next, intelligent cloud. The big one, as we discussed, fueled by Azure. Revenue up 21% overall for the segment, hitting $26.8 billion. Operating income up 17% to $11.1 billion.
So huge growth, slightly slower operating income growth than revenue, maybe reflecting investments.
Possibly. Investments in build-out, R&D for AI, that could temper the operating income growth slightly compared to the pure revenue jump. Still very strong, though.
Definitely. And the last segment, more personal computing, Windows, Surface, Xbox, Search.
Right, that one had more, let's say, modest revenue growth, 6% up to $13.4 billion.
But the operating income there jumped quite a bit, didn't it? Up 21% to $3.5 billion. What's the story there? Slower revenue, but faster profit growth.
Yeah, it's interesting. The report points to a recovery in Windows OEM revenue, licenses sold to PC makers.
Ah, so the PC market may be bottoming out or improving slightly?
Seems like it. Plus, devices revenue recovered too. And then add in that strong AI-boosted growth in search advertising we mentioned. That really helps the profitability of this segment.
So a better mix of revenue within that segment, leaning towards higher margin stuff.
Looks that way. Focus on profitability there.
Okay, shifting gears, slightly cash flow. Still a cash machine.
Oh, operating cash flow was $37.0 billion just for the quarter. That's up over 16% year over year. Huge amount of cash generated.
Wow. And what are they doing with all that cash? Investing heavily, I assume.
They are. Capital expenditures, or CapEx, hit $16.7 billion in Q3.
$16.7 billion, mostly for...
Mostly for expanding cloud and AI infrastructure. Building out data centers, buying servers, GPUs, all the stuff needed to power Azure and their AI ambitions.
That's a serious investment. But even with that spending, they're still returning cash to shareholders?
Yep. Returned $9.7 billion in Q3, mostly dividends, about $6.2 billion, and then $3.5 billion in share buybacks.
So balancing investment for growth with shareholder returns seems prudent.
And they still have a very healthy cash pile. Cash and investment sitting at $79.6 billion. Gives them a lot of flexibility.
Definitely. Okay, let's briefly touch on opportunities and risks they mentioned. Opportunities seem pretty clear.
Yeah, continued cloud adoption is still a huge runway.
Yeah.
AI expansion, obviously. Security is another big one. Growing demand there.
Right, cybersecurity solutions, and maybe that potential PC market recovery we talked about.
Exactly. And expanding more into regulated industries. Lots of growth paths.
But there are risks too, of course. Competition.
Fierce, especially in cloud and AI. Amazon, Google, and others are right there. Regulatory scrutiny is always a factor for a company this size, too.
True. And cybersecurity threats aren't just an opportunity, they're a risk if they get breached.
Absolutely. Plus, macroeconomic uncertainty could always dampen IT spending.
Right.
And those huge CapEx needs for AI. That's a risk if demand slows unexpectedly.
Lots to keep an eye on. So, summing it all up, the main takeaway really seems to be that powerful combination of cloud and AI, right?
I think so. Their dominance in cloud, now supercharged by this deep integration of AI across everything they do, that's clearly driving these strong results.
The strategy seems to be working, delivering financial performance.
It does. Sustained demand for cloud, layered with these new AI capabilities, it's a potent mix.
Okay, so here's a final thought then, something for you, the listener, to maybe ponder. Microsoft is pouring billions into AI infrastructure, moving it into Azure, Office, Windows, everything. How is that likely to reshape industries beyond just tech over the next few years? We see the tech impact, but what about manufacturing, healthcare, finance?
That's the multi-trillion-dollar question, isn't it? The potential ripple effect across basically every sector is enormous.
Sure.
When you combine this tech with Microsoft's reach, yeah, it's going to be transformative. Definitely something to watch.
Agreed. Well worth keeping an eye on. And if you want to dig deeper yourself, definitely check out Microsoft's full reports. Thanks for joining us for this deep dive today.